As always guys, this is just for entertainment purposes only, this is not financial advice.
Hey guys, and welcome back to my channel. I just put in a buy order of CLIQ Digital 32 shares. That will increase my position with slightly over 10%. I'm actually up 30% on this stock, and it's really, when you look at the 1 year here, you can see it is more, it's more on the high side than it's on the low side. It had its low. I think this was a period of a lot of uncertainty, and a lot of people told me, oh, you have to sell this stock at the time. What is it? There's so much risk. What are they doing? And now CLIQ.de has launched, and look at what the share price did. But I usually would, I think it's instinctive. You don't buy more shares of a stock that's up 30%. As a value investor, we have this instinct. But it's been 1 year since, or almost 1 year since I started to buy this stock, and I haven't bought this stock for about 6 or 7 months probably. And so to make a purchase now, I want to explain you why I decided to buy another 1,000 euros, because I already have 9,000 euros invested in this stock. Well, firstly, they launched CLIQ.de, and I watched at the offering. I think there is a free trial, you can try it. They charge about 7 euros per month, if I recall correctly. Here, 6.99, cancelable anytime, so feel free to try it. And I looked at their collection, and it's not bad. They have a large amount of movies. That's what they're starting off with. Netflix, when they started, they mainly had movies. Now they're more famous for their TV shows. So at the beginning, they had mainly movies. And these are not like the smallest, the smallest type of movies. Like, there's a lot of high quality here. It's definitely competitive with Amazon Prime. And the fact that they also focus on audiobooks, games, children films, children's series, children's music, audiobooks for children, game fun for children. So a lot of children's stuff for families. This looks like really a nice addition, especially because they're focused on the German market, so I expect that they will have a lot in German. And Germany is the biggest country in the European Union. They're extremely wealthy. Don't underestimate the size of that market. It's probably, compared to the US market, I think the US has 300 million people, Germany has 70, so 25% of the US market. Plus, probably they can get a foot in the door in Italy and in Austria, also two huge markets. But that's not the reason that I bought the stock again. I probably will try CLIQ.de at some point. Haven't had the chance yet, but I will try it. It actually is to a state that I say, well, I would like to try this. But when you look at here, 31st of January, their numbers, and that's as a stock investor, I'm mostly interested in that. Sales are up 84%. Name me one company where the sales were up 84%, and that's trading at a PE of 7. So it's crazy. But also look, operating free cash flow 15 million, 10 million net cash position, so that's profit. Whoa, no, it's on their balance sheet, 10 million of cash. And the outlook, sales of more than 345, so they broke the analyst expectations, who were predicting a free cash flow of 13 million, by the way. So it's more than a 10% break of the analyst expectations. It's absolutely crazy. This is absolutely crazy, guys. So you can see the paid membership, 45% growth, also crazy, coming from 1.3. This is not on CLIQ Digital, by the way. They have a lot of streaming services, single streaming services. They're going to focus more on CLIQ.de in the future. But that's all the membership of all their services they have worldwide. So the marketing spend, they're increasing marketing spend, unlike many companies who are decreasing. I also like their outlook. So they have basically raised the outlook 345 I don't think they're mentioning anything about 2025. So the outlook for 2025 was 500 million of revenue. The company currently, I resaid this already, I will probably say it a few more times, but the market cap is 200 million. So I've been reporting on this stock for a while now, but I see I'm no longer alone. Here you have this guy, Matthias Sufa. I never heard about him before, but he seems to be CEO of Kingston Europe. Sorry, Matthias, if you're listening. I haven't heard about you before, but you haven't heard about me before probably either. So we see here he is more bullish. He says that the revenue will grow even further. And also he says 500 million in 2024 is achievable. That's really bullish. I'm much more conservative, but I'm not conservative about the stock price because I think it's severely undervalued. Might be the most undervalued stock that I am owning right now. I would like to have a look at Netflix, guys. In 2010, Netflix, everyone said, oh, Netflix has a ton of B movies, who wants that, blah blah blah. And look where they were in 2010, 2009. I think Netflix, it came out in the US as streaming service in 2010, and look where they went. Of course, they are global, they're not just limited to the German market, but I think the first 10 years, that was US alone, so they slowly grew to like a mammoth. Here you can see the analyst forecast. So you could see their forecast for 2022. They had forecasted to here a free cash flow of 13.2. So it looks like they haven't updated these forecasts because the free cash flow was 50 million. So looks like the analysts were wrong. And could they also be wrong here and here? And these are compared to even my analyzations, to my expectations, the analysts are more bullish than me, and I'm extremely bullish, and the analysts underestimated it. So yeah, I don't know. The reason that I'm less bullish is because I'm more bullish about the revenue than the analyst, but I'm less bullish about the free cash flow because I think they're going to spend more on marketing to get CLIQ Digital to get that revenue up. And I think that revenue, I think they can get $1 billion in revenue over the coming years, actually. Beyond 2025, I think I agree that, I will show you my numbers. I'm always making calculations based on free cash flow. Guys, look here at the financial health of this company. This is crazy. So their liabilities have dropped from 18 to 10%. So that's crazy. And look here, they have a debt of 7 million, and they have on their balance sheet cash and short-term investments 10 million. So they can pay off that debt today. So no problem if the interest rates are too high. They want to pay off the debt, no problem. Here's all the money you need. So that means they have a lot of money to give to shareholders. They have a dividend yield, by the way, 3.6. Some people will say, 3.6, that's so high. Well, look at the payout ratio, 26%, and that ratio has been dropping actually. I think analysts, they are predicting the dividends to be raised. I don't know if that will happen. Maybe it will happen. Maybe they will focus on growth of CLIQ Digital .de. So far the company has been quite good to me. I also want to go to my valuations. I have a few growth rates that I put, and when you look at my growth rates, the analysts here, they have actually higher growth rates than me, at least on the short term. They don't make predictions on the long term. And here they have actually also interesting, they underestimated the free cash flow for 2022. I overestimated it, so I did a more conservative analysis now, and I decided to be more conservative than the analysts going forward. Even on my high growth rate, I'm currently more conservative than the analysts. And you can see my high growth rate is quite high. Did I really put it? Oh, let's not put it that high. Let's put it to 20%. But I can put it to 20% to show you guys. So what has changed since I started in 2022? So the PE has dropped, so it's an even better buy than it was now. The 3-year earnings growth predictions has slowed down to 18%, down from 20%. That's quite normal when a company grows and grows, but the whatever CLIQ.de is going to contribute to that has not been factored in yet. So debt, as I said before, down to 10%. Really loving this. Dividend up. That's mainly to do with the price share that has dropped since I last reported on this stock, which must have been about 6 months ago or so. Payout rates, so that's a payout rate compared to dividend, 26%. I like this low. I think it can drop even more, to be honest. I wouldn't, if they just kept the dividend exactly the same as it is now, it would be fine for me. Or maybe they can grow it with, say, let's 3% to reward the shareholders, but I don't want them to double it or something like some analysts are predicting. The margin, I have to see at the full year end earnings when they're out. But right now the market cap, it's down from 209 to 200 million. So it's actually down from when I first started to buy this stock. Of course, I dollar cost averaged on this stock. And well, look at the moment you've all been waiting for. Price target on the low side, it's 31 euros. So it's still up from 30.75, but you have to hurry. And that's when it goes 8%. Price target medium 44 and price target high 63. Even my high target, guys, it's below the analyst expectations. Keep that in mind. So, and the analysts, they missed here. They underestimated 2022. So maybe they've changed their analysis for the high years. Well, maybe they're too bullish, maybe they're not too bullish. So let's see. I mean, but I think both me and the analyst, we were pretty close. The analyst said 13, I said 18, ended up at 15. I said 18 because that was their own guidance from CLIQ Digital. And yeah, they prefer marketing spending at the moment. And that's perfectly fine, as long as they're growing. But you can see, like, there is really a nice upside to this stock. It feels also like a safe stock. They have a good balance sheet. They have a nice growth rate. They have a plan for the future. They have a dividend to reverse, so they care about shareholders. So yeah, let's see where that's going. Guys, thank you so much for watching. If you like my videos, please like, please subscribe. See you next time.